Hello everyone, George DeSantis here with the look at the market for the week ending March 18th, 2016. We had a very interesting week and we can look forward to some exciting times in the next week or two. Whether this market will go any higher, and if so, how much higher, etc. So let's take a look. Let's begin by looking at the monthly chart of the S&P as we usually do. So let's see what we have on the monthly chart of the S&P 500. Couple of things. If we take a sort of global look here, remember this is a long-term chart. If you're a long-term investor, this is one of the, you'll buy and hold stocks for a long time. This is one of the charts you want to look at. So we've had a high here, we've had a lower high, and so far we have an even lower high here. We had a low here and a lower low. So with the definition of a downtrend being lower highs and lower lows, we are in a downtrend on the monthly chart. Now, if we look at the parabolic is still above the most recent price bar. So there is no indication from the parabolic that we should reverse this trend because the parabolic SAR means stop and reverse. Well, there's no stopping and reversing at this point. Not yet anyway. Although we do have a nice bullish bar here for the month. We opened here, we're so far we're closing here. So we're at the high for the month. That's bullish. Now, if we look at MACD, interestingly, MACD is still on an uptick here. But notice that we had MACD making upticks here. We had this false breakout, and we are wondering now, is this going to follow suit? Is this going to be another false breakout? Because Kalman filter is still below the instantaneous trend line. At the bottom of the chart, there's more encouragement from the Elder Force Index because Elder Force Index just broke above the zero line. But again, notice that it broke above the zero line here, and that was a false breakout. We're still in a downtrend of all these peaks of the Elder Force Index. So the monthly chart must give us reason for pause. In other words, don't get too cocky on the longer term direction of the market. And that's really my assessment of the monthly chart. Let's take a look at the weekly chart of the S&P. So here's the weekly chart of the S&P 500. There's a lot to take in here. So let's start at the top of the chart. At the top of the chart, we have the market making a high here. Then we have it making another high here. But it's a lower high. And if you plot that trend line, what you get is a trend line that is topping out here at 2094. Okay, so now if we plot this other trend line in blue, we see we had a high here, okay, and then another high, and now that trend line is smack on top of the 2050 line, or thereabouts, 2054. And so the big question for me here is, are the bulls going to continue to race along here and go up to challenge this 2094 level? Or are we going to see a regression to the mean? When we look at the best choice charts later, you will see the best choice chart, which I sent you in an email. You'll see that we're at above the 90% level on the regression channels, and that is usually a top which leads to regression to the mean. So let's continue. So we have this trend line here. Right now we're bumping up against that, and that's resistance. So we don't know whether this thing is going to continue higher or if we're going to get a little bit of a move and a false breakout as we did here and as we did, well, back here, I believe. In any case, there are a lot of bullish indications on this chart. First of all, the Kalman filter broke above the instantaneous trend line. So, I mean, the bulls are still looking pretty strong here. The parabolic is now below the most recent price bar. So last week's price bar, the week before that, we hit the parabolic here, and now the parabolic drifted below. So the bulls look in a pretty good position. The big question is, are they strong enough at this point to continue this race up, this racing trend up here, or were we going to get that pullback? Now, RSI 12 is now above the 50% line, which is also quite bullish. MACD, after this bullish divergence here, continues to trend up and is now above the zero line. Again, that's pretty bullish. Percent R crossed above 50% and is continuing to rise. So all in all, except for the fact that we are bumping up against significant resistance at 2054, that the market seems overbought at this level on the regression channels, as we'll see later, and that there's even more overhead resistance here. The bulls seem pretty good, and we've had a nice run. And as I said in an email to you guys during the week, those of you who get the emails, I sold everything because I am anticipating we're going to get a regression to the mean. So let's take a look at the daily chart. Now this is the daily chart of the S&P 500. We've looked at this chart many times. I drew in that trend line we were looking at on the weekly chart. So you can see again, it's right here at this level, at the 2054 level or so. And again, the question becomes, yes, we have a beautiful looking uptrend, but does it continue or does it fail to break above this level? That will only be determined in time. Within the next week or two, we should know more about that. The parabolic is below the most recent price bar, which means there is no indication yet to reverse the trend, which is this uptrend here. Now, Jerry Appel's sum of the rate of change indicator has a nice looking uptrend here, and that's pretty bullish. The buy signal is when it crosses above 4%, and that was way back here, and it was correlated with this cross of the instantaneous trend line by the Kalman filter. Now MACD, after this bullish divergence, continued to cross above the zero line. We're still there. We're still in the bulls are still in control. And at the bottom of the chart, percent R is again pointing to significant momentum. So maybe I sold too early, and left too much on the table, but we'll find out pretty soon. Let's take a look at some other charts. Let's take a look. Here's another daily chart of the S&P with a few other indicators. First of all, this chart has the 930 approach. In other words, the 9 EMA is the yellow line, and the 30 WMA, 30 weighted moving average, is the blue line. Now we notice that the 9 crossed above the 30 here, issuing that buy signal back in February, okay? And since then, we have not had a close below the 9. So I'm thinking, well, if we find some resistance at this level, we might get another buying opportunity in this market. Should we get a close, meaning a red bar or even a green bar, but a red bar especially closing below the 9 will offer us another buying opportunity. Should we find that this resistance level is not holding up at all? Now this level here, we find RSI 12 is still very bullish, above the 60% line now, holding there. And this indicator here, Larry Williams Pro Buying Indicator, I wrote it into this Supercharts program some time ago, although it is used with futures. It simply says that the pros are usually buying, closing the market. So the indicator is a simple, the exponential moving average of the close minus the open for the last 14 periods, or in this case 14 days. And once it crossed above here, it remained above the zero line. So this indicator is very bullish too. And look at Larry Williams percent R. It's now in very bullish territory above the, in this case, 80% level. Okay, so yes, very many bullish indications. My major concern is resistance at this level up here. And do we get a breakout? Is it going to be a false breakout or something other, or maybe just a continuation of this bullish run here? We'll find that out. Now this is the best choice chart. It's a regression channel. when the market is at this 90% level here, we usually get a regression. Okay, it's a regression channel, and we are likely to get a regression back to the 50% line. This is the spider, which is the ETF of the S&P 500. It just tracks basically the same. So here we are at the 90% level. And if I showed you going back a year, this is a 6-month chart, but if we were looking at a yearly or 2-year chart, we would see that whenever this indicator, whenever we get to this level here, this overbought level of 90% on the regression channel, we do get a somewhat of a pullback. May not go all the way back down to 10%, but we might get it somewhere down to about 50%. So this is what concerns me here. One of the reasons why I decided, look, I'll take the significant profits I had and I'll wait to fight another day. We'll find out in due time whether this is something that we should have paid attention to or whether we could have ignored it. I think we should have paid attention, and that's why I sold. Let's take a look at something else. Now here's that chart that Alex Elder's new high, new low index is plotted on. And I want to point out something here too, in the same vein of some caution about the toppiness or possible toppiness of the market, in spite of all the bullish indications we find. First of all, yes, we came down here. We talked about the fact that if we broke above minus 4,000, this market will continue to go up, and so it has. Now at the bottom of the chart here, we have MACD plotting the MACD of the new high, new low index. There is a bearish divergence. We have a new high of the index from this level to this level, okay, and even here. And now if we drew a trend line from this high of MACD, see the bulls were very much in control here. The bears took over here, and now we have this indicator trending down as the new high, new low index trends up. And here we are below the zero line now. So that gives us some reason for pause again in terms of the strength of this trend. Keep that in mind. Let's take a look at the impulse bars next, okay? So this chart shows us the impulse bars, you know, the red, green, or blue bars on the S&P 500. And again, you know, very bullish. I mean, the 9 is above the 30, and the market and the 30 is also above the 50. So this is really looking very bullish. We had a very good volume day here on Friday. So really, it's a struggle between the bulls and the bears. You can see that if you looked at the highs here, they're low highs, and even this is not broken above this line here. If we plotted it, this is where we are now at about 250, and again lower lows. So we're looking to see what transpires next. It's anybody's guess, but my guess is we're going to get a little regression to the mean, and it might offer us another good buying opportunity. So it's going to be a pretty interesting couple of weeks coming up here, and I'm not saying that this market is not going to continue higher, but the question is when. Does it break through the resistance levels now? Do we get a regression back to the mean and then move another leg up? Big question. Have a nice weekend. We'll be around again next weekend.